All right, everyone. Welcome to our December 2019 investor call for High Point Multifamily Real Estate. We are the proud owners of Somerset Villas in Lee Summit. To kick things off, I will hand it over to Kuntai. And Kuntai, are you there? Maybe.
Okay. Now.
Kuntai, there you are. Okay,
Can you hear me?
I got your phone number. Yes, I can. Okay. I will progress the slides and mute myself. Go ahead.
Yeah, very well. Thank you, Greg. Thanks, everyone, for joining us. So today we put this update package together for you guys and gals, and we wanted to talk about a little bit about summary of what we had in the last quarter, more likely just to date where we are, and we want to talk about the metrics, and we want to talk about capital improvements. And Greg is going to touch base on the cost segregation, and we are going to also talk about the plan for the first quarter of 2020 for our next quarterly meeting. To get that going, I just wanted to summarize a little bit, and just like the Greg said earlier, so we're the proud owner of this asset, and I can very pleased to inform all of you that the last quarter and the entire year even, we used some conservative approach, conservative mindset to get that the asset up to speed, fully perform, and making a cash flowing asset for everyone, for us, for the limited partners, for everybody. So and we achieved that goal. I'm very pleased to inform everyone that we achieved that goal. Our last quarter, we had the occupancy remain strong. We're currently holding the occupancy at 89%. If you, the next slide will tell you a little more details, but just on this one right here, the biggest the plus that we had, actually the reason that why we became successful is we chose the right property management team. We turned out to be a strategic partner, and they did a good job of managing the units and the vacancies and the maintenance and also the turnover. So I also would like to tell you that our unit count has increased to 52 units, and we started with 48. We had four not in commission basement units. We completed those, and tenants moved in already. As far as the maintenance-wise, we didn't have a lot of maintenance issues, and we had the biggest items that we had on maintenance-wise that we put commercial-grade sump pumps there, and we did the proper wiring. We did properly secured those sump holes. We repaired that retaining wall per the engineers' the suggestions and recommendations on their report beginning of the year, and we just fixed other minor roof issues and etc. But we had a pretty good last quarter on maintenance wise as well. So next slide, please. Well, and Greg is going to talk about metrics on the next.
Perfect, Kuntai. Appreciate that. So real quick update here from where we're at from an operational perspective as well as a financial perspective. Hopefully you guys kind of see this format. This will be the format we're going to do monthly, just to kind of give a quick snapshot on everything, and then we'll plan to do these more in-depth quarterly calls throughout. So at about 5 months of ownership, this is through November, We were projected to be at about 87% occupancy, and that it was strategic just because we knew we were going to renovate the units. We knew that there was going to be more downtime. We can't just move a new tenant in the day after an old tenant moves out or anything like that. So that's all strategic and part of the business plan. I'm happy to report that we are at 89% occupancy with 46 units out of the 52 being leased. We do have there's 7 in what's called a make-ready status. Obviously, 46 and 7 do not add up to 52. We have 1 move out at the end of this month, which again is planned, but we are in the process of, engaging contractors and things like that and engaging maintenance. So that way, right after the new year, right after that tenant moves out, we can get that unit up and running and get it get leasing going and everything like that. We do have 14 leases coming up in the next 4 months, which again we knew about. We knew that there was a heavy leasing period in March of every year. Obviously, that's strategic from the seller's perspective. It can be advantageous for us as well. But obviously we don't necessarily, and not all 14 are in March. I think about 7 or 8 of those are in March. The rest of them the other half are spread out and then over the first 3 months there. But we're actually working with our property manager and seeing if we can, for the tenants we want to keep, we can transition those tenants into a newer rehabbed apartment. And the tenants that, for whatever reason, circumstances have changed, they don't want to stay at Somerset anymore, we'll work with those tenants to move them out when their lease ends and rehab those units. So we just actually kind of started that process this week and talking with the property manager, what can we do to incentivize a tenant we want to keep at the community and get them to move into a new unit. Maybe even before their lease ends, or something like that. That way we can kind of stagger these renovations a little bit more even throughout the time. Our average rent is currently about $615, which is great. A market increase from what our projected rent was supposed to be, and that's really just. We picked the right asset in the right location, and that's a testament to the number of prospects we have coming in here in the door. And I would say about 40 of these are actually from, I think it was about November 21st. We did a heavy advertising campaign. So right before Thanksgiving, even during that holiday time period, we still had a lot of applicants, a lot of people looking for new housing over the next 30 to 60 days. So our applicant pipeline is extremely strong. From a financials perspective, we're pretty much right on target. I won't go through all these numbers up here. I'll go through more of the graphs. So our budget, what we had projected originally, is in the darker teal or blue, and our actuals are in the tan color. So our NOI, our net operating expenses, are net of all the money that we've collected, less all the money we paid out to run the operations, is higher than we projected, which is good. That's exactly where we want to be. I mean, this is extraordinary, actually, at this time of at this part of the process. So it's a really good place to be. And really, this is testament to having picked the right property in the right location. Our rent prices, we've actually talked with our property manager about 2 months or so ago, and because of all the interest and because of the quality of the improvements that we're putting down, which John will talk about in a little bit, within the right budget that we have for the rehabs, we're actually looking to increase our rents because we're actually getting too many applicants at the rent price, and we need to just reduce the total number, increase the quality of the applicants, and we do that with pricing, basically. So we'll distribute these slides after the call, and you guys can go through this more in depth. But anywhere from a $20-ish increase to even more substantial, an $80 increase on these new 1-bedrooms that we had built out. So with that, I will turn it over to John. I'll unmute him. John, are you there?
Yeah, can you hear me?
I can. I'll let you go.
Sounds good. Okay, so for capital improvements, I think we have this. Okay, there it goes. So, like we mentioned to you guys in the prior emails, we were shooting towards about the 3,500 range on each unit. We're coming around anywhere from 15 to 1,800 on those unit upgrades. We first did some testing on doing some simple upgrades such as just giving a good paint job, possibly replacing floor, updating the bathroom, but not messing with, appliances, countertops, fixtures, things like that, just to see if we can get real close to the projected rents. And we're able to do that with minimal amount of input. Obviously, the goal is to get the most bang for the buck, so we didn't move totally forward with improving every unit since we were able to get most of the rents projected. That also gives us some room in the future to, step up the game if we see, the market soften a little bit. But at this moment, it's better to capture most of that rent without putting that much input into these units. So it gives us some powder for the future. So like I mentioned, on these upgraded units, what we've done mostly is paint jobs on the cabinets and walls, luxury valve plank on the ones that needed it. We're able to keep the carpets and give them a good cleaning if they were in good condition, and they rented just fine. On good amount of them, we are refinishing the tub surrounds. That will enable, obviously, mitigate any water damage and seal those for the future. And, of course, we're going to rebrand here in spring. So, of course, you guys know we added the 4-unit build-outs. That was a long and extensive process. You saw the pictures. It was just studs, and then now they look like this. So we're pretty happy with how that turned out. They were there every day, even on weekends. We had plumbers, electricians there, obviously drywallers, HVAC people, flooring. Everyone is in there struggling to get it done. These guys are busy too, so we're glad that we could get them in there to take care of this. For some of the items we put in, pretty standard stuff. Like I said, we didn't want to get crazy with the budget. We're not trying to tackle the most expensive type of tenant. We put laminate countertops, luxury vinyl plank in there, similar to what we do to upgrades. Black appliances. We decided to go with mini splits here because we are able to use only electricity. They're much more efficient than the commercial grade HVAC systems that you generally see, with a big system outside. They're really efficient. They're really popular in Europe and Asia. They're just 2 heads out there, and they're able to pump out cold and hot. And they're all electric, of course, low maintenance. You don't have to replace filters in them. You could just wash the screen out, and that makes it really easy for the tenant. You got a remote control there, and those heads in those in the 1 bedroom, 2 heads in the 1 bedrooms, and then 1 in the studios are more than enough to keep the tenant comfortable. What else? We also replaced the doors. They were in bad shape, so we went and replaced those. You can kind of see it in that right picture there. We were able to also put in new windows that completed the whole look there. Plumbing, electrical, that was all redone because there was just it was just bare minimum guts from before. So we had some good feedback from the property manager and also tenants looking at these, and obviously these are renting first versus the other ones. So we'll be able to get premium rent for those.
Hey, John, before we step ahead here, can you talk about what we also did regarding these windows and the water mitigation that we did with those?
Yeah. So I think it might be on our next slide, but what we did with those is those large windows there were walkout doors. What we did is we went and took those out and built those up probably around 3 feet or so. Built it up with concrete and framed them in there, drywalled, and just put a window there. So any issues that we might have with, some any rainfall coming in, this will be the backup system. Obviously, we'll talk more about the first line defense, which is we have a prior wall that was set there, and also we've upgraded the sump pump system to make sure we definitely keep all water out of their commercial level sump pumps. And I'll talk a little bit more about those. You'll kind of get a different view into these other slides.
No, that sounds really good, John. Appreciate that. I just want to get that visual here that these were sliding glass doors at one point in time, and this was part of our plan to prevent these units from having water in them as much as we can. I'll move ahead.
So here's some renovation pictures of the current units. You can see they look pretty good, and I guess I don't know if we have I don't know if you have some of the prior pictures. I guess I didn't put that in there. These are all after they're done, but the prior pictures are of the units, of a beige and brownish tan trim type look, beige carpet, mostly wood for cabinets and doors. We went ahead and painted the trim white. The wall's gray. It's a pretty modern standard right now. The property manager agrees that people are into right now. Luxury vinyl plank, similar to the stuff we've been putting down the new units. And then obviously painting the cabinets and putting on new hardware. A lot of the countertops were in pretty good condition. We haven't actually come across any that we needed to replace, so we can either replace those or coat those. Not a big deal. We also haven't had any issues with people, asking for anything else. So we've kept most of the fixtures in place and the appliances. Anything obviously that's cosmetically looks worn or bad or it's not functional, such as water fixtures, we'll obviously replace those to mitigate any damage. But from a cosmetic perspective, we wanted to provide the most for the least. So let's go ahead and move on to, okay, so here's a few things that are kind of mixed in. Starting on the picture on the left, here's one of the doors that we've replaced to a double hung window. This goes along with us replacing the windows in the studios and single bedroom units to again be the last line defense in case we had any water come in there. They've had some water come through those doors before, maybe whatever, like half an inch, but still, it would get the carpet wet and whatnot. So we built these up, so there's no way that the water is going to get this high, especially with the sump pumps going. The next picture there is some electrical upgrades on the sump pumps that we did before. They were on ground level. They weren't boxed in properly. They were GFCIs, not shielded correctly, and they weren't going directly to the breaker. So we took these directly to the breaker, so we don't have any GFCIs prematurely pop, and then obviously that would render the system inoperable. You could see there on your bottom right, we have commercial grade sump pumps. They're little giants. We got 2 of them in that particular area that'll pump a little bit less than 200 gallons a minute, running through 3-inch pipe, and then both converging into a 4-inch pipe, and then running outside and being directly piped to the spillway. So we won't be, adding to any water that we may see on a super heavy day. And again, just keep in mind these are super, super rare things, and we don't foresee any issues, but we wanted to build build it up enough to where we won't have to worry about it at all. And because that's we need to keep our tenants comfortable. As far as the wall, you could see it there. We're gonna go ahead and give that a paint job and pretty it up a bit. We just got it done. We just got some bracings done by Foundation One. Norton Schmidt got us the engineering specs on it, so they built those dead man anchors according to that. I believe they're every 5 feet away, extended on that wall. Those are super heavy channel beams. Lifetime warranty. You could see a picture above there. That channel that's cut out there above on the parking lot is one dump truck full of concrete to anchor those dead man anchors from preventing those beams to pull out. So essentially, they said those things aren't moving. So we feel good with that install there. And just as a side note, we didn't see any shift or anything like that, so it wasn't necessarily a priority, but we figured it'd be good to put in the system now for the little amount of money we paid for it versus that whole wall shifting and then having to re-pour it. So this was good preventative measure for us into the future and for future owners. They won't have to worry about that. Let's see, what do we have next? I think that might be it. So I will push it back to Greg.
All right, sounds great, John. Really appreciate that. So really, I'm just going to talk a little bit about cost segregation. Whoops, going the wrong way. Really more about what it is and how it benefits us at High Point here. So really what it is in the simplest terms is accelerated depreciation. And what we do, and this is all codified by the IRS. You can look it up. You can Google it. And what you do is you reclassify real property as personal property. So you have your real physical object, the buildings, everything like that. But you also have all the components that go into the building, the wiring, the plumbing, the cabinets, the flooring, the painting, the window coverings, et cetera, et cetera. Some of those items wear out sooner than in our residential case, 27 and a half years that we would normally depreciate things. So what we can do is actually transfer or convert that real property, break it down into all of its individual components, and classify it as personal property, which then can be depreciated more along the actual useful life of that property, which could be 5, 7, 15, 20, or then the rest of the building would be the standard 27 and a half years. So flooring is 5 years. You're going to have to replace the carpeting and other flooring probably more than likely in 5 years. That's more realistic what the actual useful life is for this. So what we're able to do then is actually take all the flooring throughout the entire property, and instead of depreciating that over 27 and a half years, depreciate that over 5 years. So we get more depreciation. We accelerate the depreciation earlier in the ownership of the property. So what does that do then? So depreciation is often classified as a phantom expense. It's not showing up on the profit and loss statements. It is showing up on the tax returns, and it lowers your tax. It lowers your taxable income. So what we're then able to do is, since we're paying less in taxes, we can then take that money and reinvest it in the property. That's the idea behind this from Congress and from the IRS. That's why this rule exists. It also creates, the cost segregation study creates then an audit trail. So it's not just us saying that, hey, we think the flooring throughout the property is worth $1 million. It's actually done by a third-party engineer that has a lot of data behind it that says, hey, for this quality of flooring, for this style of flooring, here's the value of it, and we can depreciate that value across it. So if the IRS ever comes back to us and says, hey, show us the details behind this deduction, behind this depreciation deduction, we have the report from a third party that will back it up, which is very important. It's not just It's not just us saying that, hey, we want to depreciate the whole thing in one fell swoop. There's actual data behind it. With that, we are actually able to further accelerate depreciation with the Tax Cuts and Jobs Act that was put in place by Congress in 2017. This actually allows for all 20-year and less, so less than 20-year personal property to be deducted in the first year. So I'll actually show you a chart here in a little bit, and that'll probably make more sense. But basically, instead of depreciating that 5-year and 15-year property over those time periods, we can just take a huge lump sum of it immediately in the first year, which essentially would create a loss a loss for all intents and purposes. Just a few things to consider, and we'll talk more. These are more or less when we would go to sell the property in this, but just want to make everybody aware it's not necessarily all roses. There are some gotchas in this because IRS and the U.S. government wants its tax money at the end of the day. There's a thing called depreciation recapture, and essentially this is very similar to if you're contributing to a 401k at work, a traditional 401k, not a Roth or a you've started funding an IRA yourself or anything like that, you receive tax deductions now for putting that money away for retirement, just like we would receive tax deductions now for taking the depreciation on these real estate investments. When you go to pull out the retirement funds, when you're 70 and a half or 72 in retirement, 75, whatever those are, and you take those distributions, you have to pay taxes on that. When we go to sell the property, they're going to say you had a capital gain, and we also want our depreciation that you were benefited from over the years. We want that to be taxed as well. So there's just something to think there. Just to note that it's not just free money all the time. There could be a potential gotcha or catch up when we go to sell the asset, which again, that really leads into why what's known as a 1031 exchange. That's the tax code number is 1031. That's why it's named that. But basically, it allows you to transfer your equity and the depreciation that you've taken on property A when you sell it, transfer all of that over to property B when you buy it. And that's done with a third-party administrator in the middle. We don't actually take control of the funds. They're held in an escrow account, and we have some time constraints to abide by, basically about 6 months to complete the transaction, to complete the buy transaction from the sell. So we are able to mitigate those taxes, the potential tax risk in the future there. Again, this could be just a whole segment in and of itself and everything, but I just wanted to give you guys a snapshot. If you guys want to hear more about this, we can do something more in a future webinar. Just real quick, I don't want you to get lost in the details. We'll provide these slides out there, but essentially this is how it's broken down. We have a land value of about $260,000. We have our building cost, which is the core structure, of about $1.3 million, and then we have about $600,000 or so of individual components that make the building livable: the plumbing, the electrical, the flooring, the painting, et cetera, et cetera. And so this is how it's kind of all broken down and into each individual 5, 15, and 27.5-year property elements. And then this is basically how it looks on a schedule. So this is what we're going to give our accountants. So for 2019, we're actually going to have a $618,000 depreciation loss on for the first year. That's obviously split out by everyone's individual ownership percentages, and then every year ongoing after that, it's going to be about $47,500 on that. And so basically what that does is that depreciation will just a calculator will just continue to roll forward. I think it's allowed to roll forward for about 20 years. So we have plenty of time to use that up, and you should. Again, I'm not an accountant, but you should be able to use this if you have any other passive activity gains from that perspective. And again, we're not necessarily wealth advisors or anything like that, but if you do have some circumstances, we can at least talk about the topic with you, and then that way you're a little bit better educated when you go talk to your accountant or whoever you do a business with from that side of things. So if we didn't do the cost segregation, we would be about $47,000. Or sorry, non-CS, be about $70,000 a year is what we would calculate. The first year is shortened because we owned it for just a little bit more than 6 months. So you can kind of see the difference there in what we would collect. So it's very advantageous for us in terms of being able to provide as much tax-free money as early as possible in the ownership of this property. So with that, I think I'm going to hand over to Kuntai 1 second. All right, Kuntai, you there?
Yes, I'm here, Greg. Can you hear me?
Perfect. Yes, go ahead. We'll talk about what's up next.
So in the next quarter, our team will focus on a few things. One is we want to improve our cosmetic appeal, and in order for us to attract some higher quality residents and help lower our maintenance expenses. So and then one thing that we want to do is we want to do exterior painting once the weather permits in Kansas area. So we're thinking about that right around maybe March time frame. So the other thing we want to do here, we want to do some rebranding here. So when you really Google, when we did the Googling the property and how the reviews were for the management and for the property, it wasn't really bad. However, we still want to promote better marketing, and we really want to flush out those existing negatives that we inherited from the prior ownership and the management. So what we want to do with the rebranding is we want to put a new signage to the property. It's something that is more visible. It looks better, and we definitely want to get some updated exterior pictures and for marketing purposes, and also that we want to overall reshape the resident culture and just to get the quantity tenant quality increase by doing that. So the third and in my opinion the most important thing is that we want to work on the outdoor design and new design in lieu of the pool area. So our team, including our management team, the property management team, we realized that the pool has not been utilized a lot, and as you might guess, that the maintenance of that pool and the cost ineffectiveness is the biggest concern for us. That we really want to get that pool maybe decommissioned, and instead of that, then we get a good outdoor area design with some grills and some seating, pergolas, whatever it is that we were definitely looking forward to get some ideas from you all as well. But we just want to eliminate the pool and get some better outdoor design. So the challenge is that there are just other properties out there with the pool, but in the meantime, like just the utilization is low. But also if we get rid of the pool, when you get some other outdoor living area ideas with the grills and seating, we should be able to get based on our the initial the research on it. Then we should be able to get like a really good, really tenant quality and also and really attractiveness and appealing for the property as well without the pool. So and also like with the high maintenance and the cost, and we can save also a ton of money as well in the meantime. So these are the three ideas for the next quarter, and these are the three major tasks. So with that said, any questions so far? I mean, Greg, how do you want to do this?
Yeah, so if anyone has any questions, I guess I'm honestly not sure if we talked about them. If we, I'll open up John here real quick and see. If anyone has any questions real quick, you could email them to us. I think we forgot to mention that originally, so apologies on that. John, are you there? Have you received anything by chance?
Not at the moment.
Okay.
We have also, guys, we have also chat on the webinar, right? I mean, can they use that as well?
Yeah, I guess we could throw some questions in there. That's fine. We did forget to mention that obviously people can reach out through their contact emails, or obviously we can schedule anytime. You guys know I'm always available for questions. That's not a big deal. So, but just to add too, aside from these other larger projects engaging in 2020, the rest of the plan for the renovations is just go as planned. So we're just looking to use the extensive pipeline in the area. Obviously, that's one of the reasons why we picked this property, to take advantage of an upper scale tenant quality. And you renovate those units to a point where we can match that. So we are trying to change the tenant culture a bit, straighten people out, be a little bit more strict on items, keeping the place clean, because that's how you add value. We're here to change the outlook and makeup of the property, and as you know, that changes your neighbors, which in turn changes the whole culture and rent range of the whole property. So it does take a little bit of time, but overall that's going to result in higher rents, better feedback, less complaints, better tenant care of the property, and all in all higher returns. So let's just work through that, and I think we've got a good start.
No, excellent. All right, I don't think we have any questions right now, but as John said, if anything pops up or any people watching the recording on this, just reach out to us, and we'll answer it and make sure that everyone has the question and the answer as well to that. So with that, we've got one more item to discuss on this, and that is the really fun part, which this has all been fun, at least for us. Hopefully it's been fun for you guys as well, but the distributions on everything. So we originally planned to have distributions after the first 6 months of ownership, so that would have been in the April-May time frame, after July through January, July through December initial holding. But things have been going they've been going pretty well. They've been going really well on everything, and so we decided to give some cash back. So we will allocate $15,000 to be returned to everybody involved to date. That's just split based on your allocation of ownership again. This is about 28% of what our year one projected distribution was overall. So I think we're about $53,500 to be distributed overall. So we're ahead of projections from that point in time. And then we'll be working with Orion Property Group, our property manager, to get those funds distributed. That's one of the reasons why we wanted to get all the bank information and everything like that from you guys a couple months ago, because one, we needed it, and two, we started forecasting that this might be an opportunity, and it's come to fruition from that perspective. So So we really thank you. We thank everybody here. I mean, we really feel this is as a partnership. You know, neither one of us could be in this position on this call watching this recording if we didn't all group together and band together for a like investment that we can all buy into. So really appreciate that. I know Kuntai and John feel the same thing. So with that, we'll update this slide as well as we go through the months. But basically, you know, we plan to pay in February, May, and August of next year, and then, you know, give or take 3 months after that. But more or less about 45 days after a standard calendar quarter has ended. We'll get the payouts done after we finalize the books and everything. So with that, you've got our contact details. We do have a High Point email address that can just basically go to all of us as well. And so if you want to start using that one, I think that's where these invites actually came from. So you can email that, and that goes to all of us at the same time, and we can respond accordingly. So with that, we thank you very much, and we'll update you guys here towards the end of December, early January with our progress, and we'll see you on the next quarterly investor call. Thanks, everyone.
Thanks, everyone.